Good morning, everyone. Welcome to our webinar today. We'll just give it a minute and then we'll get started. Wait for everyone to come on in. While we're waiting for everyone to join, I'll just let you know that we've got Andy from our customer success team on with us today as well. And Andy will be helping us in the chat. So please feel free to say hello in the chat. Let us know where you're joining us from. We are we're in Sydney today. It's lovely, lovely weather, which is very nice. I'm keen to go for a walk after we finish this webinar. I hope you're doing the same. So Andy will be in the chat helping us out there. Feel free to comment as we go through the webinar in the chat. If you do have any specific questions, please use the Q&A function at the bottom of your screen. That way we'll be able to answer all of those. We do have some time for some live Q&A at the end, and Andy will be helping to answer some of those questions throughout the webinar as we go as well, but it just make sure we don't lose any of your questions. So I'll just share my screen and then we'll get started on our content for today. Oh, wow. Someone from Alice Springs. That's awesome. Welcome. All righty. Can everyone see our slides there? If I can get someone, yep. All right, great. Thank you for that. And we will get started. Okay, so today we're talking all about finance and payments. You'll see some terms today, obviously financial services, but also the fintech sector and the payments industry as well. All kind of industries and sectors that are the same, but also quite different. And we know there's things like the rise of blockchain as well, that all kind of go into this big payment sphere that we know here in Australia. So yeah, lots of different little industries we're going to be looking at within a larger sector today. And just before we start, a reminder that Superhero does not provide financial advice. It considers your personal objectives, financial situation, or particular needs, and all investments carry risk, so please consider carefully before investing. We will be looking at quite a few charts today, so just a reminder that past performance is not indicative of any future performance, and any pictures, graphics, charts, and graphs are provided for illustrative purposes only. And I got through that one without making too many mistakes. All right, just a reminder that this is part of our Sector Spotlight series. For those of you that might not have joined a Superhero webinar before, we're doing a range of these different Sector Spotlight webinars. We've done a few already, and there's a few coming up leading up to the end of the year. And we're covering off kind of all of the main different sectors that are available on the markets, both here in Australia, but also globally, as we offer US shares as well. So today we'll be looking at both the Australian market and the global market as well when it comes to finance and payments. So the world of finance, two slightly different areas of finance that we'll be looking at. The first is financial services, and this encompasses things like banking, loans, debt, credit, capital markets, money movement, investment, and essentially the creation and oversight of financial systems around the globe as well. So financial services is probably the more typical understanding of finance. So things like your bank, who you might have your home loan with, your debit card with, the likes of, Visa and MasterCard who provide payment services. It's kind of those typical finance brands that you might think and know of, as well as some of the more business to business brands. So investment banks, and things like that as well. And the finance field includes three main subcategories. One is personal finance, so the kind of products and services that you and I might use in our day-to-day life. The second is corporate finance, so how do companies finance their activities and mergers and acquisitions and kind of that corporate world. And then the third one is public finance, so how do governments kind of manage their finances, whether that's taxpayer money or kind of their day-to-day activities as well. So yeah, The financial services sector, no surprise, is a primary driver of a nation's economy. The budget was announced just last night. So yeah, a big part of that is essentially how the government's going to spend their money. And that really does drive the economy in a larger form as well. And the fintech industry or sector. So fintech refers to the integration of technology into offerings by financial services companies in order to improve their use and delivery to customers. Or to break that down, it's essentially companies that have created technology around financial products. And really, it's about how do we make things cheaper, faster, more efficient. Fintechs have really come up because sometimes in a really big organization, it can take a long time for innovation to actually be created, but also put into operation. And so, a lot of these disruptor companies or smaller companies, who I like to say Superhero is one of those, have kind of created new technology to make more efficient or more cost-effective some of these more traditional financial services products that we use. So examples of this are things like robo-advisors, payment apps that we're all using now, peer-to-peer lending apps, so new ways to loan money, investment apps, crypto apps, which we're well versed on, and a range of other different products as well. And this graph here just shows you how much of the entire ASX 200 or the top 200 companies by market capitalization in Australia, on the Australian market, how much of that is made up of financial services companies. And you can see there that it's 28.2%. So a large portion of the ASX 200 is involved in the financial services space. Big part of that is our major banks. So the likes of CommBank, Westpac, ANZ, Macquarie. These are big companies. And so that makes up a large portion of that, but also some smaller payments companies as well, which we'll go through a few today. And interestingly, so technology you'll see there is a smaller makeup of the total ASX, but technology also does play a role in the financial services space as well. So when it comes to that financial sector, you can see here some of the biggest financial services companies that are involved in the ASX 200. So this is the XFJ index, and it's the 28 companies on the ASX 200 that are classified as part of the financials sector. So you can see there the big banks, we've got some insurance companies listed on there, the ASX itself. So interestingly, it's a bit of a catch-22, but the ASX is where we trade. We trade on the ASX. But the ASX itself is actually listed on the ASX. So you can actually invest in the ASX, the company, on the ASX. And we've also got, some of the smaller banks there as well. And just to highlight what I said there around the technology sector, the technology sector is the 14 companies on the ASX 200 that are in the technology space rather than the traditional financial space. But what I've highlighted here in red is companies that are technically part of the technology sector, but have, their main business is really in financial products and services. So Computershare, for example, and Link Administration do a lot of administration stuff when it comes to the settlement of share investments, which is, related to finance. And then Iris is a similar platform as well. And then you've got the likes of Block and Pushpay, which are more in the payment space, but I guess traditionally classified as technology. So important to have a look at not only the traditional sector, but also these technology brands that are coming up and either serving the financial industry. So kind of that B2B product space, and also kind of new payment spaces as well, whether that be for businesses or for retail customers like ourselves. So trends in finance and payments. What are we seeing as being the up and coming trends when it comes to innovation in finance? The first one here is digital money. So I'll read from the screen here for a moment, but the new wave of digital money are mobile payment apps and so-called digital wallets. So app-based services that allow users to pay for things, for example, via contactless payments and transfer money to others. So a perfect example of this is I got the train to work this morning. And, when I went in to tap into the train station. I double clicked on my phone, tapped, and off I went. So that use of Apple Pay there. Interestingly, some that you'll be very familiar with here are the likes of Apple Pay, PayPal, Google Pay. But it's really interesting that globally, there are so many different kind of payment wallets now. I was in Vietnam recently, and they've kind of skipped the card section of the finance trajectory. So they've gone straight from cash to QR code payments. So they never really had the card phase, and they've gone completely into this mobile, internet-based digital wallet world, which is just really interesting to see how fast that innovation is happening in some of the developing countries. So the second trend here is financial apps. So the digitization of money is creating a lot of data around what customers actually want to do with this money. And essentially what companies are trying to, or they're doing now, is taking that data that they have on you, whether that's information around how you spend your money, what type of loans you have, your credit score, and they're actually using that to suggest or offer you insights as to how your money is tracking, and also potentially some products and services that may be of interest to you based on your situation. So instead of a traditional website where you see, here are the 4 products that we offer, now what brands are starting to do is using your personal data. We'll have a look at personalization in a moment, but they're using your data to then provide, I guess, better insight as to the products and services that are relevant specifically to your situation. The third trend is called embedded finance. And put simply, embedded finance is the placing of a financial product in a non-financial customer experience. So if you think about more of a traditional finance partnership, a perfect example would be getting an Amex card where you earn Qantas points. So it's a loyalty scheme attached to a financial product, and you're able to earn points on your purchases. Now, that's great. I love Qantas points. But the next generation of this embedded finance world is that what they say is you almost won't even realize that you're paying for something. So it's things like customer loyalty apps where instead of having to go into a cashback site and having to do that for every purchase, you might have a card where every time you spend it, hundreds or thousands of different retailers, you're getting loyalty points for those without having to sign up to individual loyalty programs. So it's a bit of an idea around the types of products that are being thought of at the moment, and brands are going in that direction where it's less effort and it's just way more convenient to pay for things, but to also get rewarded when you are purchasing as well. And 3 more trends to go through. So intelligence and personalization. We spoke about this briefly in the whole financial app space, but really, brands are very aware of the amount of data that they have now, and kind of using that data to provide more relevant insights. When it comes to personal data as well, obviously privacy is a really big thing at the moment too. So understanding that balance between open data and giving people that insight, but also making sure that a customer owns their own data and that they are in control of that, and that is secure and private as well. We know with some of the cybersecurity stuff that's happening at the moment, that is of utmost importance as well. So it's really looking at that balance between openness and shared data and use of data with privacy. Real-time payments. This is another one that's, constantly being innovated on, and a big focus for the government as well. But looking at real-time payments and how we can make sure that we're paying for things fast, on time, and that there are multiple ways to pay. For example, Superhero is a great example of this in terms of if you wanted to deposit into your wallet, you can do that via more traditional methods like bank transfer or BPay, but you can also use Pay ID, which is immediate. And you can very simply kind of use your unique pay ID there to get money straight into your wallet and ready to invest. And the last one there is digital currencies. So we all know blockchain and crypto has been a big trend over the past couple of years, and increasingly governments and regulators are looking at this space too, to understand the technology, understand the current landscape, and also understand how the technology can be used in new ways, and in ways that have regulation around them and keep people safe as well. So definitely still on the agenda. Now, this graph picture is extremely overwhelming, so I won't ask you to look into it too much, and we'll just have a look at it quickly. But it looks at the fintech landscape in Australia. This is from KPMG, and you can really see, sorry, the blue. Excuse me. Had a tickle in my throat there. You can really see here that these blue boxes represent kind of the main areas of innovation and of the fintechs in Australia. I'll do a little test quickly. Which box do we think superhero is in? And can anyone find where superhero is in this? We are in there. I'll give it 1 second to see it in the chat. Anyone, if you can pop in the chat approximately on the page where it is. Can anyone, or just guess which box we're in? Feel free to pop it in the chat. Anyone? No one yet? That's all right. We can move on. I'll tell you. We are down in the bottom. It's on the right-hand side of my screen. I'm not sure where it is for you, but in the wealth tech section, if you go down to the second row, you'll be able to see superhero in there with a bunch of other wealth tech companies. Yeah, very nice. Got it there. It's a big, big picture. It's quite small on the screen. All right. So moving on to the Australian fintech sector, we spoke about general trends that are happening in the financial services and fintech industry. This is just quite an interesting little look at the fintech industry in Australia specifically. Some research done, or a survey done by KPMG, released in June 2022. And it asked a bunch of different fintech companies in Australia, all a bit more about their business. So we'll start from the left and go across. So they were asked which of the following best describes your primary customers. So who do they sell to essentially? And you can see there that corporates and small to medium enterprises actually made up 53%. So within the fintech sector, 53% actually sell to other businesses. And why is this important when we're looking at investments? I guess, you and I interact with a range of different financial services companies every day. And these might be the ones that initially come to mind when you're thinking of making an investment as well. But it's important to note that there's a lot more companies out there that are innovating and that are creating value in the system. They might not be brands that you understand because you may not work in the financial services industry yourself, but they're important to look at when considering investments as well, because they are making revenue and they're on the market too. So even if you don't necessarily know a brand when you first look at it, it's important to look at what the company's actually doing and whether it might be of interest to you as well. And when it comes to the category, you can see there that lending is actually the biggest category. So anything around loans and credit, followed by payments, data and analytics, insurtech and I always forget whether it's regtech or regtech. But yeah, a lot of these, what you'd call kind of more back system. So not necessarily lending and payments is maybe more front of mind, but a lot around the analytics space and insurance and regulation, where there's a lot of innovation happening as well. When it comes to the size of these businesses, now this isn't just companies listed on the stock exchange. In fact, a lot of these probably aren't listed on the stock exchange because they're a bit smaller, but it really does show you where the innovation is. And potentially, some of these companies may be on the stock exchange, or they may be, looking to IPO in the next couple of years as well. So just interesting to look at. You can see that of the companies surveyed, a lot of them were still quite small. So kind of that under $1 million mark, but a few really starting to hit that $10 to $25 million a year of revenue. So definitely a space where we've seen a lot of growth over the past couple of years. And you can see there, a lot of these companies have raised money recently, so in the previous 6 to 12 months. So they're very much at that stage where they're trying to grow quite quickly and trying to really innovate fast as well. And yeah, look, it says there, you can see that 55% of the companies surveyed were founded after 2015. So fintech, as it stands, is quite a new industry. Obviously, there's been innovation in finance for a long time, but there is a lot of new companies coming up in this space, and definitely over the past couple of years, but continually as well. A lot of innovation happening in the financial services sector. And just a note on international expansion as well. Of the companies surveyed, 49%, so nearly half, were actually looking to move overseas as well. And some of the top companies there was the UK and the USA. So again, an Australian company doesn't just have the Australian market in terms of its potential for growth. A lot of these companies are also looking to expand overseas, to countries with a lot higher population than Australia as well. So, companies that start in Australia do have the ability to expand overseas, depending on what the company is, but to expand overseas and to kind of get a whole lot more growth than they can if they were just in Australia. Moving on to payments. So we've spoken about the trends generally in finance. Then we had a look at the Australian fintech industry. What's happening in the payment space? So we'll look at Australia firstly, and then a bit more globally. So when it comes to Australian payments, this first graph on the left shows cash payments as a share of total consumer payments. And you can see there by number of payments or kind of number of transactions, and then also by the value of the total payment flow. So essentially, all it shows is that cash has dropped rapidly between 2007 and 2019. So, going from about close to 70% in 2007, 70% nearly of all transactions, or consumer transactions, were done using cash. Compare that to 2019, and we're at less than 30% of all transactions using cash. I know for me, it's a rare time. Maybe I'll go to the markets and need to use cash, or occasionally for a coffee, but pretty much all of my transactions now are done online. And that has definitely been the trend. And when it comes to online payments, so we've moved from cash to online payments, but what types of online payments people are using? Let's look at the 2019, which is that furthest on the right. You can see there that debit has continually risen over time, so using debit cards. Credit is the next one there. Credit cards have actually decreased recently, interestingly. So credit, I guess, used to be the main lay-by or buy now, pay later. It was the alternative to that. But credit has actually decreased a little bit as debit has increased. PayPal, they're still making up a decent proportion of payments as well, but less so than it was in 2016. And the red there in 2019. And, it'd be interesting to look at what this then becomes in after 2022, because this is done kind of every 3 years. So we'd be kind of up for it now. But I'd say buy now, pay later would have grown quite a bit from that 2019 stat as well. But you can see they're already starting to make inroads in terms of a payment option for people as well, kind of as an alternative to traditional credit. All right. Now, automatic payments, So we spoke about kind of finance apps and embedded finance. This is where things like automatic payments come through, where instead of, I guess, when you get a bill, so let's look at a water bill, for example, it's when instead of going in and paying that bill every time, you might have a direct debit arrangement set up where it kind of automatically comes out on a monthly basis. So you can see there that automatic payments as a share of total payments are on the rise. They've risen quite rapidly over the past 10 years and are becoming second nature to people. And you can see there that bills are definitely a really big use case for that. So setting up those direct bill payments, people are doing that more and more. And alternative payment methods. So based on, I guess it's back to that digital wallet thing. So we spoke about mobile wallets, tap and go. You can see there that buy now, pay later is definitely the most used there, followed by mobile tap and go. So Apple Pay, Google Pay, Samsung Pay. Crypto, interestingly, so a lot of people have heard of cryptocurrency, or had heard of, when this was done, had heard of cryptocurrency being used to pay for goods and services, but very low have used methods. So people know it's an option, but we have very low uptake of that in Australia, or businesses don't really take crypto payments often in Australia, whereas in some other countries, it is much more common that you'll be able to pay for your normal goods and services with cryptocurrencies like Bitcoin. So yeah, it'll be interesting to see over time how that changes for cryptocurrency. And you can see a couple of other ones there. In-app on mobile phone, Pay ID, Alipay, WeChat Pay, which obviously is smaller in Australia, but huge overseas in China. And then Beam It, which is kind of a peer-to-peer app. I use it a lot for paying my friends for dinner. If we do kind of split payments, or paying, for bills with a share house or something like that, it's quite a common payment method, particularly among young people. So that was Australia. What about globally? What are we seeing globally? These two graphs here, or pictures, compare countries that are moving away from cash at a rapid pace versus countries where cash is still king. So when it comes to moving away, I'm sure this won't be surprising to people, but it's really the Nordic countries that are leading the charge. And we've got New Zealand in there as well, but you can see there Norway, Finland, Sweden, Denmark, Netherlands, Switzerland, kind of these European countries that are really, really taken to technology and have moved away from cash. So you can see there that, yeah, cash-based payments in Norway and Finland are making up only 2% of total payments in the country. So yeah, just a crazy level of online payments there. Obviously, high internet access helps with that. So you can see there that pretty much everyone has access to internet, and some other countries there, New Zealand, Hong Kong, and the UK as well. Australia is also getting up there. So we might not have made the top 10, but we are very, very close to that level where really seeing low levels of cash payments. That previous graph was from 2019. So yeah, I mean, I know how much I've transitioned even over the past couple of years to online payment methods as an alternative to cash. And then we compare that to where cash is still used a lot. So Spain and Italy, cash is still used a lot. Japan and Germany as well. Again, this was 2018, so sometimes hard to get the most recent data because it takes a while to come out. But funny enough, countries like Spain and Italy, very, very close in location to some of the Nordic countries, and the countries, yes, Sweden are on both of that chart. So these are from two different sources. So it's just showing, that second one on the right just shows really the difference between a country like Spain and a country like Sweden. So Sweden, just to clarify there, the second one on the right doesn't show the top 10 countries where cash is king. It's just showing you a comparison of different countries from 2018. But you can see there even how much Sweden, for example, changed. Just to note on Sweden, 20% in 2018. And again, these are different sources, so take it with a grain of salt, but 20% on 2018. And then they'd moved over, to way more cash-based payments in a couple of years, which is on the left there, which is a bit more recent data. So you can see there that, how different a country like Sweden is, for example, compared to Spain. Two countries in Europe, not that far away in geography, but when it comes to their culture around payments and society as well, very, very different. So yeah, just some really interesting insights there around how countries have adopted or not adopted online payments, which then again, as we're talking about investments, really interesting to understand where payments companies are kind of already very established, and also where they're seeing a lot of growth, because you might see a payments company that's very, very established in Australia or the US, but all of a sudden a payments company might spring up in Spain or Italy and really see, and this is purely hypothetical, but because the country is so early on in their payments adoption journey, is there greater potential there for growth? These are the kind of things to keep in mind. And digital wallets. So we spoke about digital wallets being a massive trend. this is a look at which digital wallets are the most used around the globe. And you can see there, Apple Pay. I mean, how many people have an iPhone in Australia? A lot. I've just moved back from a Samsung phone to an Apple phone, and I finally stopped being bullied at work, which is nice for me. Not really, but yeah, Apple Pay, huge in Australia, but really dwarfed when you compare it to some of the Asian-based payment platforms like Alipay, which is linked to Alibaba Group, and WeChat Pay. So just huge numbers and massive adoption there. And some other really interesting ones there too, ones that I hadn't really heard of that much. The bottom two, Venmo and Cash App, are quite big in the US, particularly around younger people and peer-to-peer payments, kind of like BMIT might be in Australia. But then some really interesting Paytm, PhonePe, ones that you wouldn't really know, but do have quite large uptakes overseas. Okay, so now we get into the juicy stuff. We are going to run through now a couple of different finance companies in Australia and the US, and also a couple of ETFs as well, just to give you an idea about some of the different companies and investments that are available on Superhero in the financial space. So first one is Macquarie Group. So Macquarie Group provides diversified financial services in 4 segments. So they're a multifaceted company, and they've got Macquarie Asset Management, they've got banking and financial services, commodities and global markets, and Macquarie Capital. So a huge company. They employ more than 17,000 staff. And while they're Australian headquartered and listed on the ASX, they actually operate in 33 markets and have offices around the globe. And they are actually the world's largest infrastructure asset manager, which for an Australian company is a pretty cool claim to fame, I think. And they're also Australia's top-ranked mergers and acquisitions advisor, with more than $737 billion in assets under management. So a huge global finance company headquartered in Australia. They've got a market cap of $61 billion, and just some information there around them. Got a trailing 12-month dividend yield of 3.6%. And in terms of their performance, their one-year performance, and this was from a couple of days ago, but their one-year performance was sitting at minus 18%, but their 5-year performance was at 68%. So I guess on a per annum basis, they've hit kind of more than 10% a year in the last 5 years, although the past year has been a little softer for them. And you can see that over on the graph there on the right as well, kind of the most recent data, which is quite reflective of, I guess, what's happened in the market as well. The second one here, taking things a little bit smaller, is OFX Group. And I'm not sure how many of you have heard of OFX Group, but they provide online payments and foreign exchange services. So the International Payment Services segment, which is one of their segments, offers bank-to-bank currency transfer services to businesses and consumers. And then the International Payment Solutions segment provides the OFX IT platform. So an example of this, someone in my family runs a little fashion store. And so, for example, they need to buy stock from Europe and America. So when they need to buy stock, they need to pay in euros or in American dollars sometimes. And so they need, and often, quite decent amounts of money. And sometimes their normal bank may not always provide the best rate or the best currency transfer rate for them. So they may choose to use an OFX platform to do that currency transfer, potentially getting a better fee or rate with OFX versus a regular bank. Again, to say that it's always cheaper, but yeah, that's essentially the kind of service they're providing, a more simple, easy, efficient, and potentially cheaper way to transfer money around the world. And you can see their market cap of $628 million, a dividend yield of 2.63% in the last 12 months, and their one-year performance. So you can see here that really in the last year, they've taken off again. So again, do your own research. You can go into the platform, understand a little bit more around some of the announcements they've had recently, do some research around what that performance has come from. But you can see there in the last year have had quite an increase in their share price. even compared to the last 5 years. They have been around for a couple of years, but yeah, really seen the last year a lot of growth there. All right, so we just spoke about two companies that are, I guess, brands or companies in their own right. This next one here is an investment company. So it's the Pangana Private Equity Trust. And this trust gives investors the opportunity to access a diversified portfolio of global private market investments with an allocation to private credit and opportunistic investments. So as opposed to investing in Macquarie, that's a company listed on the stock exchange, if you were to invest in Pangana Private Equity Trust, or PE1 is the stock code, you would actually be, I guess, investing in a portfolio of other investments that are not publicly listed on the exchange. So this type of investment is a way that you could potentially invest in the returns or growth or performance of companies that are private companies, so that aren't publicly listed on an exchange, through a trust arrangement or a portfolio arrangement like this. So you can buy and sell units of the trust, and the trust holds investments into a range of private companies. And you can see there on the right, these are some of the companies that PE1 invests in. So some there that you might know of: SpaceX, which is Elon Musk's involved in that one, Stripe Payments, ByteDance there, that is the parent company of TikTok. So a range of different industries there. So it covers quite a large, a large range of industries, lots of different markets as well there, but access to some companies that you wouldn't normally be able to invest in on the stock market as companies themselves. So yeah, just a bit of a different one. It's in the finance sector, I guess, because it's an investment company, but invests in a range of other companies in a range of different sectors. So just a bit of a different type of investment there. And you can see there, I won't go through the details, but some of the performance that PE1 has had in the last 1 and 5 years as well. All right, moving on to the US now, Goldman Sachs. So Goldman Sachs, I'm sure most of you would have heard of Goldman Sachs, but they are an investment bank at large. So they operate investment banking, securities, and they're an investment management company. And they've got 4 segments as well, somewhat similar to Macquarie, but investment banking, global markets, asset management, and consumer and wealth management. So huge global company as well. They're nearly double the size of Macquarie in terms of market cap. And yeah, you can see some performance numbers there as well. Again, in the last year, somewhat similar to Macquarie, down 21%. But over the past 5 years, have seen 28% share price growth and a bit of a dividend yield there as well. But yeah, big global company, Goldman Sachs. They have presence in Australia as well, but they are US listed, which you can invest in on Superhero as well. Alrighty, blockchain. Moving over to the digital currency world. Riot Blockchain focuses on building, supporting, and operating blockchain technologies and the technology ecosystem. So they have a digital currency mining operation, which is essentially using specialized computers that generate digital currency, which is primarily Bitcoin, as well as a range of other blockchain activities. You can look them up and understand everything that they're involved in, but very blockchain focused and blockchain specific. And yeah, I mean, you can see there that their performance in the last year has not been so great, because I guess we had that massive spike in crypto and then it's kind of tapered off a little bit there. So yeah, not a great story in terms of their historical share price performance, but doing some really interesting things in the blockchain space. And again, for those of you that are in the blockchain space and are true believers of the technology, it's again important to look at the long term and not just the short term there as well. But yeah, I'll leave that to you to do your own research on Riot. Alrighty, ETFs. I thought it was important to look at a few ETFs because the financial services sector is so broad. Really an interesting look at more broad ETFs versus very specified ETFs in the finances space. So the first one here is a look at an example of a broad-based financials ETF. So this one's listed in the US. It's the US financials ETF. And essentially, it's looking at an index composed of US listed companies and equities in the financial sector. So you can see there, we've got Berkshire Hathaway in there, JP Morgan, Goldman Sachs, the investment banks, the more traditional retail banks, Bank of America, Wells Fargo, and then some asset managers and investment managers too, the likes of BlackRock in there, which is also a big provider of ETFs. So a really diverse range of different financials in there. And yeah, you can see some details on it over there on the left. So it's kind of looking at a broad-based ETF. We'll move on to a slightly more specific ETF. So this one's the Eck Australian Banks ETF listed on the ASX. Oh, sorry, my light's gone off. Just got to make that one try and come on again, or we'll just leave it. That's fine, we'll leave it. Oh, there we go. This ETF aims to track the Australian banking sector. So we're not looking at the whole financial sector, we're purely looking at the banking sector. And you can see there, we've got Westpac, ANZ, NAB, Commonwealth Bank, Macquarie, Bendigo, and Bank of Queensland. So quite a targeted group of assets there, but exposure to specifically the banking sector. So if you want to invest in the banking sector in Australia, but don't want to pick one bank, but also don't want to go full financial sector, this could be a good medium there for you. But there's a range of different kind of broad-based and also banking-based ETFs, both in Australia and the US. So definitely have a look around and compare different ETFs as well. Some really important things to look at, as always, when we're talking about ETFs are the management fee. So 0.28% on this one versus a bit of a higher fee on the last one. It can just depend on the provider, the type of investment, how active the ETF is as well, in terms of how often investment managers are looking at those investments and the breakdown of those investments. And again, with ETFs, really important to look at the percentage of fund assets that each company makes up as well. So using this one as an example, if you look at the right, you can see percentage of fund net assets. And you can see there that Westpac makes up 20% of the fund's assets versus Bank of Queensland on the bottom that only makes up 1.35%. So it's important to understand what you're actually getting exposure to. You're not getting equal exposure to all of those banks. So it's not 10%, 10%, 10%, 10%. You're getting 20% and 15% and 1%. So the performance of the ETF will depend more so on Westpac than it will on Bank of Queensland, because of that breakdown. And different ETFs will have different breakdowns, even if they look quite similar from the outset. So just important to do your comparison there on the holdings as well. When it comes to crypto, there's a range of different cryptocurrency ETFs out there. To use an example here, we've got the BetaShares Crypto Innovators ETF. And it's not investing in cryptocurrencies directly. So you'll see there on the right, the assets are not Bitcoin, Ethereum, Polkadot, but it's actually more companies that are involved in the blockchain space more broadly. So MicroStrategy, Coinbase, Marathon Digital, and Galaxy Digital, as well as you can see Riot there that we went through before. So yeah, more broad-based, looking at the blockchain and cryptocurrency industry rather than investing in Bitcoin itself. And you can see there the sector allocation, sorry. So really software is the biggest sector within this. So really looking at software companies in the crypto space is the biggest way, the biggest investment for that one. And yes, you can see there monthly performance fees. Yeah. Again, the cryptocurrency industry has taken a bit of a beating in the past couple of months, in the past year, but obviously important to understand where that came from historically, right? So yes, it does look terrible when you look at it even on a 1-year base. So, from this time last year to this time this year, but then if you look at it on a 5-year basis, it might be a very different story, because we know that crypto had such a spike and then has come off. So important to really look at the long term, and also to understand when you're thinking about your investments, what is your own time horizon? Are you investing for 1 year, or are you happy to invest for the long term in something you really believe in over 5-10 years? So yeah, just make sure you know the reasons why you're investing, how you're making your own decisions, and what your time horizon there is there as well. And the last one we'll look at in terms of ETFs is more of that direct access to the performance of Bitcoin in this case. So the Cosmos Purpose Bitcoin Access ETF, long name, but essentially its aim is to track the performance of Bitcoin. And they've got a really interesting, this is from their website, but an interesting explanation of how the ETF works. So for example, an investor, you would buy a unit in CBTC, which is the code of the ETF on a platform like Superhero. The ETF then invests directly in another ETF. So it's a bit complex, but it's an Australian listed ETF that is linked to a US listed ETF that invests directly in Bitcoin. So that's what it's saying. So it's saying you would buy units in the Australian listed ETF. So if you didn't want to you could go and invest directly into the US listed ETF if you wanted to, but if you didn't want to go through currency transfer and all the like, you could invest in the Australian ETF. They then are linked to the US ETF, or they buy units in the US ETF, and that ETF, its underlying investments are Bitcoin. So it's a way to get direct access to Bitcoin, or I guess indirect access to Bitcoin and the performance of Bitcoin without having to invest yourself into Bitcoin. So just an interesting one there. Versus you can see that they've explained the different process of directly buying Bitcoin. And yeah, again, performance will say, but yeah, it tracks the performance of Bitcoin essentially. So that comes to the end of all of our content for today. I hope that's been helpful. Feel free to pop in any questions into the Q&A function, and we'll get to them in a moment. But for those of you that may not have invested with Superhero before, just a reminder of some of the features that we offer. So you can invest in Aussie and US shares and ETFs on our platform. So all of the investments that I spoke about at the end of the content there today are available on Superhero. When it comes to fees, we've got $0 brokerage to buy Australian dollar ETFs, $5 to sell, and then $5 brokerage on all other Aussie shares, and $0 brokerage on US shares. And when you go to make an investment, you'll see there what the brokerage is that we'll be charging. You've got real-time deposits with PayID, which is an element of what we spoke about today in terms of real-time payments. You can transfer between Australian and US dollars with Superhero as well in your wallet. So if you want to make a US investment, at any time you can come into your wallet if you've got Australian dollars and transfer into US dollars, or back the other way if you want to as well. And you've got access to things like live market data, portfolio reporting, so you can get those for tax time, and then you can also earn Qantas points in a lot of different trades and transfers. So yeah, all that information is available on our website as well, and our live chat team's always available from the website too if you do have any questions in more detail about fees or features or anything as well. So if you do have any account related questions, feel free to contact the team on live chat. Let me just pop into the Q&A. Just give me one moment. I'll stop sharing my screen as well. Oh, I don't think we actually have too many. That's great. Hopefully I've answered all of your questions when it comes to finance and payments. All right. Joseph, I can see your question there in the chat. Feel free to contact the team on live chat about that one. And they can help you out there. Alrighty, well, we might be able to leave it there. I know we moved through a lot of content today as well, so this will be up on YouTube within the next couple of days, and you'll all get an email with the recording as well. So don't worry if there was a bit too much there for you. We'll make sure that we get the recording to you. So enjoy the rest of your day, get outside, and we'll see you in another 2 weeks for our next webinar. Thanks, everyone.